Hi everyone, my name is Ryan Jones and I want to welcome you to this short demonstration on the PDS Trader. This is a series of videos, and in this video we're going to focus on debit calendar spreads. Now, as you probably already know, PDS Trader is the only options trading platform that focuses on weekly options. And the reason that we do that is because, as a general rule, weekly option strategies have far greater profit potential and less risk than those same strategies applied to monthly options. And then sometimes it's dramatically greater profit potential and dramatically less risk. So in short, they're just far more efficient. And of course, weekly options have only been around for about 3 years now, so they're fairly new still. We've been focusing on this for about a year and a half. And weekly options have been gaining in popularity. They have been gaining in volume. So it's just getting better as it moves on. There are more stocks being added to the weeklies all the time. So this is really something that, if you're trading options, you really want to turn your focus to weekly options. So we're going to look at debit calendar spreads today. And one thing about PDS Trader is that it's designed to do almost everything for you. It's designed to find the best opportunities very quickly. It's designed to allow you to trade those opportunities very quickly. So you don't spend a lot of time creating the orders. I mean, placing some of these orders in other trading platforms is just horrendous. And we try and do that with a 2-click process. But finding the opportunities is just as important. So here, we've clicked on debit calendar spreads. You just go to the drop-down box, click on debit calendar spreads, and it lists all the different debit calendar spreads that are available via weekly options up here in tabs. So it's sectioned off, it's organized very neatly. Here are the calls that are 1011 versus 1019, and the puts versus 1011 or 1011 versus 1019. And then it keeps going. Calls of 1011 versus 1025, calls of 1011 versus 11.1, etc., etc. Now, generally, I like to focus on the ones that expire sooner. Generally, within 4 or 5 days is a really good rule of thumb with regard to debit calendar spreads. And of course, a debit calendar spread is simply when you sell the nearby option and you buy the longer term option. So we're buying the 1019 option and we're selling the 1011 option, and we're creating a debit. And whatever that debit is, that is the maximum we can lose on this spread. So the risks are extremely limited, and this is a very good starting point for anyone who wants to begin to focus on weekly options. You can start by focusing on debit calendar spreads. They offer limited risk. The entry price is usually very low. So for example, here's an HPQ option debit calendar spread where the risk is 10 cents or $10. You cannot lose more than $10 on this particular trade. Whereas the profit potential is as high as the sell option premium, which is at 31. So you have a potential profit that is about 300% greater than your maximum risk. Now, that's best case scenario. You're not going to generally see that in these situations, but you will often see 50, 60, 70, 100, 150% returns on a lot of these debit calendar spreads. And if you are careful about the ones you choose, then the probability of success is very high in your favor. So one of the things you want to watch out for is earnings events. And we designate and show an earnings event that occurs within the time frame of the option expiration. So anytime there's an earnings event, it can send the stock moving dramatically one way or the other. And that's really what we don't want, because then all the extrinsic value from both options run out quicker, and you end up taking a loss as a general rule whenever a stock makes a significant move in one direction or another. So if it goes deep out of the money, or deep into the money, you're generally going to take a loss. However, if the stock price remains relatively the same over the next 4 or 5 days until the sell option expiration, then you're most likely going to make money. So what we want to do is we want to be a little more careful in trading only the options or only the debit calendar spreads that don't have an earnings event coming up. Now that's not an absolute. There are some good opportunities with earnings event, but if you're just starting, stay away from the earnings events. Track the ones. You can track. Keep a track record of ones that you would pick that have earnings event, and you can see. And the reason that there are sometimes good opportunities with the earnings events is because sometimes you have very high profit to risk ratios. So for example, here you have a debit in YUM, you have a debit of 18 cents, but your maximum profit is 106. So you have a profit potential of almost 7 times greater than what you're risking. Not quite 7, closer to 6 actually. So that's actually pretty good, and it might be worth trading. But if on 10/8 there's some announcement that causes the stock to make a significant move, you could see you can see this debit go down to 10, 12 cents pretty quickly, and you might lose, and then you'll see these options devalue very quickly. So any movement in the stock can see that, but if that doesn't happen, you're going to see a fairly significant profit potential with this particular trade. So I don't want to say there's no opportunities. There are no opportunities with the earnings events, because that's simply not true. But you want to look at the ones where the profit potential, which is basically the sell price option, is many times bigger than your debit. And those are the ones that you want to consider. HPQ, for example, debit is 11, maximum profit potential is 30. That's about actually about a 200%. About a 200% is about where you want to see the minimum profit potential on these. Then you want to look at the EV ratio. And the EV ratio, it automatically sorts all of these opportunities by the highest EV ratio. And those are really the best opportunities. And I like to see anything above about 70%, 65, 70%. And if that's the case, then I definitely want to consider it. So here we have HPQ. The EV ratio is at 75%. The debit's at 10. Sell price is at 31. Those are all pretty good. So once I determine that there's a trade I want to take, I simply click on trade. It autofills the order box for you, and you don't have to do anything. Now, generally, I'm not going to do this for this one, but generally what I like to do is I like to get a better price than what's being shown. And then I just say place order. It asks me if I want to do that, and I say yes, and I do that, and my order is placed. Now, if I want to see any open orders, I simply go to my account section, open orders section, and it shows me any open orders that I have. So here I have an order to buy a debit calendar spread with puts, and then I have an open order to buy the debit calendar call spread, which is the one I just placed. Both are at 9. I'm also already in a debit calendar spread, and I have an exit order, so it's showing that exit order. So here's an open position. Click open positions. Here's one of my calls that I have in HPQ, and my entry price was 11 cents, and I simply placed an exit, and that exit order is what we see here. It's at 22 cents. So I'm going for 100% profit on this particular debit calendar spread. So that is a quick rundown of debit calendar spreads, how they work, what I look for in general. And this is a great starting strategy to play around with. Again, if you don't want to take a trade, now I'm always in favor of taking a trade and learning by experience, but you don't want to necessarily do that before you really understand what you're doing, what you're looking for. So if that's the case, just track it. You can track, simply click on the option to track. I'm going to say conservative debit spreads, and I'm going to go add. And now it's going to add that trade at 11 cents to my tracking scenarios, and it will keep track of what happens to that. And you can simply go to tracking scenarios and, or excuse me, tracking, and it will do that. And you can see here that I just added this to a brand new strategy, and it is now tracking this. So it's like trading, paper trading, so it will keep track of the decisions that you make and let you know how well you're doing in those. So this is a tremendously valuable tool, and of course it does this with every single strategy that we are tracking. And there are other videos that focus on the other strategies. So I hope this video helps you tremendously. And always, if you have any questions, contact our support team either by instant chat or email. Thank you.